I will discuss becoming a billionaire by investing in index funds. I will also show you the best, safest, and easiest way to invest long-term index funds. First of all, thank you for coming to our channel. To get more videos like this, please click subscribe and turn on notifications. Then, what are index funds? An index fund is a group of investments that lets you put all your money in one place. Index funds track a market index, often comprised of stocks or bonds. Most of the time, an index fund invests in each part of the index. They stick to the rules and hire fund managers whose job is to make sure the index fund does the same as the index. Index funds are made so that their performance is the same as an index of the market. For example, let's say I own 1,000 apartments and sell 8 for $1,000 each. Then I will sell you one of them. This is the same as having one share of stock. As a single business, you only have one home and one investment. What happens if the investment doesn't work out? But if I sold you $1,000, which is 0.1% of everything I own, you would own a small amount of each of my apartments and get an average return on your investment. There are index funds. The stock market has a history of growing slowly and steadily over long periods, which is great. Index funds are a simple way to own a piece of this growth. Some stocks may rise and fall over time, and some may even go away completely. You can get started quickly with index funds. Still, just like with any other investment, you should do your research before making a decision. Let's talk about investing in index funds now. The first step is to choose an index. With index funds, you can track a wide range of indexes. The most well-known index is the S&P 500, which has 500 of the best companies on the American stock market. When choosing an index, you should consider the region, business, industry, market potential, and type of asset. You may only have to put money in once. Then, choose an index fund. After you choose the index you want to follow, it's time to decide which index fund to buy. Usually, this comes down to how much it will cost. One of the best things about it is that index funds have low operating costs because they are set up to automatically follow changes in the value of an index. But you shouldn't think that all index mutual funds are inexpensive. There are market indexes for almost every type of investment you can think of. Some people keep an eye on big companies like the S&P 500. In contrast, others keep an eye on international stocks like MSCI and emerging markets. Bonds and other investments, such as currencies, can also be followed. If you're just starting, a broad index fund like the S&P 500 that covers the whole stock market is a great place to start. The third step is to decide where to buy your index fund. Here are some things to think about when choosing where to get the money for your index fund. Large mutual fund companies manage some of the funds their competitors offer. Still, you might not have as many choices as a budget broker. Pick a service company that can take care of your needs for convenience. Cost of doing business. Consider the fees a broker or fund company might charge when buying or selling an index fund. Options without commission if the transaction cost for the commission is not waived. Do they offer ETFs or mutual funds with no transaction fees or commissions? Buy a share of an index fund, which is number 4. You need an investment account to buy shares in an index fund. Then, you can use the brokerage you chose in step 3 to open an investment account, like a Roth IRA or a traditional brokerage account. Then, you can use that account to stand in for the fund and use these to start investing in an index fund. But it would not be fair to leave out the pros and cons of index funding from this discussion. But the good news is that the pros are more important than the cons, which makes this one of the safest investments you can make. When you look at index funds closely, you might notice that they make a portfolio of investments more diverse. Because index funds are often passive, their costs are often lower than those of actively managed funds. Index funds are a more reliable and predictable investment than alternative assets like cryptocurrencies. They usually do better than actively managed mutual funds, which have higher fees. Same as investing in anything else. Even though there will be bad days, it's important to keep this in mind. Total market index funds have a history of increasing in value over a long period, with the long term in mind. The fund's goal is to be like the index, so it often holds the same securities no matter how the market moves. The fund managers can't sell underperforming securities because they aren't flexible. This is especially true when the market as a whole is falling. Index funds are not likely to earn more than their benchmark. When the market or a certain industry goes up, you can count on the index to make you money. But you will also lose money on the index when the market falls. How do you get $1 million? Investing in index funds is one of the easiest and most effective ways for investors to build their wealth. Index funds can help you build a large nest egg over time by simply copying the amazing performance of the financial markets over time. What else? To do this, you don't have to know much about the stock market. Investors who use index funds usually do so because they don't have to manage them much. There is no need for skill because investors don't have to spend time analyzing different stocks or equities. Index funds have low fees, easy way to put money to work. It might be the easiest and smartest thing you ever invest in. Please share your thoughts about stock index funds in the comments. Please remember to click like if you enjoy this video. Click the subscribe button and turn on the notification bell to see more videos like this one.